Sony Group has been initiated at Outperform at Cowen this morning. Cowen says the market and current analyst coverage underappreciates the company's drivers. Cowen is one of the only firms with US-based coverage of Sony. Let's bring in Doug Kreutz, the Cowen research analyst behind today's Sony call. Doug, great to have you with us. So it's an Asia-based company, of course, and often seen as hardware-based and software rather than media. But you think that's missing the point?
Yeah, thanks for having me on. Sony's really transformed itself over the last decade or so. Obviously, their legacy is in consumer electronics and so forth, but over half of their revenue and EBITDA now comes from their entertainment business: video games, movies, film, and music. And they're really at the forefront of how digitization is changing the way entertainment is consumed and distributed, and have benefited a lot from that.
How much has the timing of your publication of this note, with a share price target of 20% upside, been linked to Universal Music's very successful IPO and strong initial trading and rich valuation that business has commanded?
The direct proximity was a little bit of happenstance, but we've certainly been looking at Sony over the past year or so, in part because we see that the music industry has really come back from, kind of a dreadful beating it took in the wake of Napster and the transformation of music into iTunes. Streaming is now a real powerful profit driver for the music industry. Sony is one of really three players that control the vast majority of the music that's streamed out there. So they have an excellent position, and that part of their business is growing quite rapidly.
Yeah, it's pretty incredible. I mean, in terms of that beating, it was, almost 2 decades of beating. And so to see the rebound we're seeing is really noteworthy, to your point. I'm really curious, though, about the film and TV studio piece of the puzzle, Doug, because by my count, I think Sony is the only one that's making content right now but doesn't actually have its own OTT platform. Is that going to change?
I don't think it's going to change in the near term. They do have some smaller OTT platform. They have a Crunchyroll, which specializes in anime, but they don't have a broad, Disney Plus, Hulu, Netflix, Amazon Prime type service. That was a deliberate decision on their part, and I think they feel very comfortable with the idea that they can produce content and then sell it to all these other direct-to-consumer providers who are ravenous for content. They've recently signed pay-one deals for their films with Disney and Netflix, which are going to net them in the range of $3 billion, which, it's definitely a seller's market for content right now, and we think that positions Sony very well.